Raghuram Rajan has hit the pause button with inflation rising beyond the central bank's comfort level. The RBI governor today did keep key policy rates unchanged and dropped enough hints that a rate cut may not come through in the foreseeable future. Unveiling the bi-monthly monetary policy review, he however did say that the central bank will continue to take measures to boost liquidity.
RBI says there are clear signs of a pickup in demand, although the slow pace of private investment is a worrying factor. A lot will depend on the monsoon pattern, which is likely to be well balanced. On the one question that everyone was looking for an answer, Rajan was at his cryptic best, saying that he doesn't want to spoil the media party. The key takeaways from the bi-monthly monetary policy review, that's our top story on India Tonight.
The inflation warrior in Raghuram Rajan is at work again. Unveiling the bi-monthly monetary policy review on Tuesday, Rajan played to the script, leaving the repo rate and cash reserve ratio unchanged, and even hinted that a rate reduction is not around the bend. So, is he sounding a bit hawkish?
I hate these bird analogies, hawkish, dovish, etc. I would just say it's a realistic assessment of the data that have come in. There are potential disinflationary pressures. There are also potential inflationary pressures. The net effect is we've put a little more weight on upside risk to inflation, but we have to wait and see.
Clearly, it's the rise in prices that Governor Rajan is worried about the most. Yet, he stressed that the central bank continues to have an accommodative outlook.
Given the uncertainties, the Reserve Bank will stay on hold. However, the stance of monetary policy remains accommodative, and we will monitor macroeconomic and financial developments for any further scope for policy action.
There are other concerns that also call for some firefighting, like the possible $20 billion outflow due to redemption of FCNR bonds that mature in September. According to Rajan, liquidity will never be a concern, and the central bank will be in the forefront to ensure that the market is not disrupted.
We may supply dollars in case of extreme volatility, but no one should take this for granted. But for sure, we have plenty of dollars that we can supply if necessary.
And the market is liking it all. The Nifty today took a shot at 8,300, led by brisk buying in the banking pack. Looks like D Street is betting for a second term for Rajan. Neha Bothra and Tanya Bharadwaj, ET Now, Mumbai.
Now, as speculation continues over Raghuram Rajan's extension as RBI governor, the man of the moment, quite literally speaking, was able to see the humorous side of things and the noise around him. When asked about his future at Mint Street's top boss, Rajan candidly said that he had no intention of spoiling all the fun that was brewing around him.
As far as the question of my continuing in this position after September 4th goes, it would be cruel of me to spoil the fun the press is having with all its speculation. I am personally intrigued by all the letters I'm supposed to have written. Seriously, in all such cases, a decision is reached after discussion between the government and the incumbent. I'm sure you will know when there is news. I cannot do better than point you to the statements of the Finance Minister and the Prime Minister on this. That's all I have to say.
That's Governor Rajan at his cryptic best. But let's bring on board our consulting editor, Maithili Busnurmat, to analyze the bi-monthly monetary policy statement. Maithili, do you see room for rate cuts in August, or would it depend on what steps Fed takes and possibility of a Brexit, host of global factors, how monsoon plays up, host of factors that will determine the next course of action?
On the issue of room for rate cuts, a lot depends on what the Fed action is, whether the monsoon really plays out as expected, and of course, last but not the least, whether Brexit really creates any uncertainty in the market. It is not expected that UK will opt to go out of the European Union, but if it does, there might be some temporary volatility. So it will be a combination of factors, because in a globalized economy, there are many factors that the central bank governor has to take in, not only domestic but also external. So as far as rate cuts going forward are concerned, a lot depends on how the future pans out. It's very difficult to read the tea leaves right now.
All right, I must ask you a technical question on liquidity, Maithili. Has the RBI addressed the bank's concerns about liquidity adequately? I know they spoke about bringing deficit down to nil last time around, moving on MCLR, but have they done enough to address the liquidity concerns really?
Among the many concerns that banks have has been this issue of inadequate liquidity in the system. In its April policy, the RBI had promised that it would move from a system of liquidity deficit to a more neutral stance. Of course, it did not give a timeline, and there still is a deficit, is very evident from the amount of OMO that the RBI has been doing on a sustained basis. The quantum has come down, but to the extent that bond yields, 10-year treasury yields have not moved at all. In fact, if at all they've moved up, clearly shows what the RBI is doing on the liquidity front is not enough. It needs to do much more. It also needs to try and understand why is there a chronic shortage of liquidity. Should the central bank be in the business of providing liquidity on a long-term basis? Central banks all over the world provide temporary liquidity, take care of temporary liquidity mismatches, not structural, sustained liquidity mismatches. So I think the RBI needs to review its liquidity management framework and see whether something more needs to be done in order to get the banks to start lending.
Thanks for that, Maitri, joining in with that perspective as always. Let's also get you some more reactions to the RBI's decision to maintain status quo on rates. Most experts believe Rajan's caution over inflation is justified, and a lot will depend on the monsoon. Listen in.
I think the RBI wants to be accommodative here from the language and the guidance they've used, but they need the data to give them the leeway to cut. And so I think if we find that a normal monsoon were to suppress food inflation, and later in the year you are either meeting your 5% target or undershooting it, I don't think the RBI will hesitate to cut. I think it's just that at this point in time, given where food prices have been the last few months, given that where oil has accelerated, some of the inflation risks have risen. And I think the RBI is simply reflecting those ground realities.
It's as per expectations. The RBI is probably right to evince some concern on inflation. The reality is the food inflation trajectory is uncertain, even though, frankly, minimum support prices are healthy and should keep inflation low. But there is enough uncertainty on commodity prices, on the overall consumption cycle, etc. So it's right to evince concerns on inflation. Having said that, the earlier point remains that there are several other factors which probably warrant a accommodative stance to continue on the monetary side. Capacity utilization is low, the investment cycle is far from being there, and there is still stress on banking balance sheets and on corporate balance sheets. So we'll have to wait and watch. Lots of global and domestic events to look forward to. But this policy is probably right and prudent.
It's a hugely data-dependent momentum from now on. Initially, we had an August call of a rate cut, but I think the probability of that rate cut has to a certain extent gone down, given the upside momentum that we have seen to inflation.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.